Hey everyone, time for another review. The news of the day is the Trump assassination attempt, which will basically influence everything in a bullish way because it makes it a lot more likely that Trump wins the election. Uh, it's just the Bolsonaro effect. If you remember the Brazilian elections in 2020, their president got stabbed during the campaigning season and ended up winning in a landslide. Well, fucked up shit is happening in the US. I don't know what to say. Uh, America does fucked up shit and does so in a regular basis. There's a documentary about the JFK assassination that I recommend watching. It's like 3.5 hours long, but it's worth it. It's called Everything is a Rich Man's Trick. It's free on YouTube. Search it and watch it if you have the time. Coming back to this, so we have Bitcoin and ETH which are showing a have shown a bullish reaction to what's happened, and we have downtrend breakouts for both, even though for BTC hasn't recaptured this trend line that it lost yet, but it may do so next week. Uh, and the market's reaction from the presidential debate in the US was also bullish because of Trump coming up on top. So this is kind of the same thing. The expectation is that the market will be bullish because the expectation is that Trump will win, and combined with flows, positioning, and uh, the pre-OPEX potential squeeze that can happen, I think next week we will be bullish. However, it looks more and more that we will have a reversal top. Like let's go back to SPY, and we can talk about an instant top. For example, this one in 2020 or this one here in 2020 as well, meaning we go up, go up, go up, and then have a very strong counter move in the other direction, so like an instant reversal, let's call it. And then we have tops that take a while to happen, like we had in 2021, at the end of 2021. So this isn't a reversal top, it's a distribution top. What's happened with positioning, and I'll go here, is that we went up a lot. This was Thursday, and we got to 52. On Friday, we got to 56. This is the same level as the July top in 2023, meaning the last time we got a 10% correction, and it was here. No, no, sorry, not here, here. So this was the same level as July 2023, and this ended up becoming a 10% slow correction. Uh, but the highest level from tops I have recorded. I haven't optimized the data yet, but it will be done soon, and I'll be able to look at everything in much more easily. Now I just cherry pick some dates. Was June 8th, 75%. June 8th was 2020. It was here. More like a blow off move after the bounce from COVID crash, and it went pretty crazy here, and we ended up having like a minus 5% day, which got bought up and bull market continued. But minus 6% day is a lot, and it counts. Given this, the combination of the market's reaction to Trump nearly getting assassinated, uh, the fact that we're going into OPEX week, and because of the Trump assassination attempt, it's likely that we go up. Then OPEX week puts pressure on stocks because it will cause a small gamma squeeze, meaning this is what is expiring next week. As you can see, the open interest from next week is the biggest from all expiration, which is unusual for July, but it is what it is. This being said, when July expiration is close and there's a huge amount of OI that is due to expire, anything, any movement in price will cause an unusual amount of hedging. For example, let's say we are in March and the price goes up, the July uh, contracts don't get hedged to 100%. Let's say if price goes up $1, it causes like a, I don't know, 3% increase in delta, and they have to buy 3 shares for each contract, let's say market makers. But if it's expiring this week and price goes up by $1, they have to hedge like 20 shares. Just an example. It's not exactly, it's not these numbers. But the point is, if we go up and we are at 560, let's say we push up towards 565, which is now the highest level in the market. Uh, a large amount of the contracts here will have to be hedged on the spot, on the spot, I mean, and it will increase their delta by a lot, meaning price gets squeezed and we get a bit of a gamma squeeze on the indexes as well. And this is true for all of them. Like we have Q's, no, sorry, SPY with 565 and potentially going to 570. I don't think we'll close at 570, but we could go at intra-week, we could go as high as 570, and most likely we close below 565 by end of the week. Then we have Q's, which has a similar setup. We have 500 very close. Maybe we go as high as 510 next week, even though in theory it should not be possible. But if the market starts going up, it will create the self-feeding loop of going up. And as high as 510, but not probably not close of as high as 510. IWM is 520, 220, sorry, 220. And the DIA is above 400. DIA doesn't matter actually. So IWM, QQQ, and SPY all have like gamma squeeze potential for next week, being OPEX. So if the market has an impulse to go up, and we have that situation now due to the Trump situation, it will cause a small gamma squeeze that should top out like probably Thursday. I don't think it will go all the way into Friday. What I expect is that we go, I don't know, up until Wednesday, Thursday, let's say, and then we reverse and close, have a reversal day on Friday. But it can begin on Thursday directly. Okay, so the point I was trying to make about breadth is that even though we are very high and we are at levels consistent with tops, it doesn't mean we stop yet. And I think we will make something similar to this, maybe not 75, but like high 60s, 65, something like this. And we will get a strong reversal down that gives us like a 10% correction soon because we are way too high. The way I track this is basically these are all the stock that I have data for. It's like 5,000 stocks, and uh, this is the positioning rating value they have. See, like the highest one probably has like 600 or something like this, and the lowest one now has minus 200. So basically, everything negative is negative, everything positive is positive, zero is neutral, and then we have extreme positioning, which is everything under minus 100, or sorry, greater than 100, or minus 100. And the extremes here are very high, confluent with many tops already. Same idea here. Like ultra extreme means uh, the number of stocks below 200, minus 200, and the number of stocks above 200. And this is the highest reading from all the tops I have tracked here. So we are at very extreme positioning, and extreme positioning has the tendency to become more extreme. This is a lot more visible in bottoms, like when things start to drop and they continue dropping like crazy. It's a continuous feedback loop until we get a reset. And that reset is usually OPEX, like it was in March 2020. Now we have the setup for a crazy melt up inside next week. Crazy, quote unquote crazy. It's not going to be that crazy, but we have the setup for going up a lot more and we now have a catalyst for it. It could have not realized, but I think now it will realize. So going back here, the only resistance levels that matter are the high OI levels. So like I said, it's not really that easy to predict from the detailed perspective, but I would assume we got up on Monday. I think it will be a push up with VIX green. So expect market green, VIX green for the entire week. Maybe we get a bit of resistance at 565, but eventually we should top out around 570, maybe a bit lower, maybe even a bit higher. But I'm super confident that this time we will get an instant reversal bottom top, and we will correct quite a bit. Target being 10%, because that's usually how much this type of reversal correct. It's gonna be a question of when the buyers jump in, but assume knowing how much we are up and the amount of people who will buy the top, I think we will go down quite a bit. Like I said, 10%. And let's measure 10% from 570 because this is probably the target. And the 10% is very close to a ghost print we had a couple of weeks back at 508. So probably 510 is the target, and that's kind of it. Don't don't know exactly how quick this will be. I would assume uh, quick, meaning by end of month, beginning of next month, something like. So we have just 1 week and a half for this month. No, probably until here on the 16th. Okay. So yeah, we're going into something like this or something like this and expect a larger correction. It can be as low as 5%, as high as 10%, I assume, and that's kind of it. So reminder Q's target probably like 510. IWM most likely above 220, like 222 like I have here, and SPY as high as 570. And this should give us like a unaligned top in which nothing is underperforming. Everything is overperforming. IWM continues squeezing. Maybe we have some of the mega caps making making lows, but it wouldn't matter. The market will keep going up. And we also have a couple of earnings. We have Tesla, we have Netflix, and we have ASML. So we're gearing up to go into earnings season. If earnings season catches us with everything going up and at extreme levels, the benchmark for another move up is going to be very high. So let's say it's going to be first to report aside Tesla. Tesla is not actually next week, it's the week after that. So it's just Netflix. Keep down. I think it's going to be Google, Microsoft, Tesla reporting the week after that. So after next week, and they're going to be in these 3 days here. Most of the mega caps. So if the market catches earnings with everything super overextended, the threshold for a positive reaction will be very high. So I'd expect most reactions from mega cap earnings will be negative. But that of course means that they keep going up next week. Maybe we see like something like 200 for Google, for example. Yeah. So that's kind of it. Hope this helps you guys. Have a good one. Bye bye.